Hello and welcome to our Schuldschein market update. My name is Morris Gutermann, responsible for corporate DCM at Helaba. With me in the studio, someone you know very well, Ulrich Kirschner, senior analyst at Helaba Research and our specialist for the German Schuldschein. Hi Uli.
Hi Morris.
Good to see you here. Let's get right to it. It's been a very interesting first quarter of the year, a record quarter, I'm sure you're going to tell us. Give us a little bit more details, fill us in on what's been going on.
Okay, Morris. Yeah, indeed, as you said, it was a very, very strong kickoff for the year. And indeed, we had a real record quarter in Q1. To remind us all, more than 7 billion euros were placed in the first quarter. So a very strong start to the year. And it seems as if the market is going to continue very strongly. At the moment, we have some 9 deals in marketing stage with a minimum launch volume of 1.6 billion. And from experience, we know that the final volume, placement volume, will be a lot higher than this 1.6 billion. Moreover, we have 12 deals that were already closed, but will be valued after Q1 with a minimum volume of 2.3 billion here. And also there for some of the deals, we don't know the final values yet. So moreover, not last but least, there are some deals where we get a knowledge of rather later in the year, so the two numbers I told you right now might be even higher than what we see right now. So a good perspective for the year ahead. But Morris, maybe you can tell us a little bit from your experience what's going on in the market right now.
Will do. That's a very good question, and you are right. The final sizes do become available with some delay, mostly. What's been going on in the market? Well, the elephant in the room is the big Porsche deal, the big record-breaking 2.7 billion Schuldschein. I'm sure you'll tell us more about it later on. I mean, looking at the previous year, we had a record year at something like 33 billion. And toward the end of the year, investors were getting a little bit fatigued. So we were expecting some spillover demand to come into the first quarter, and that's exactly what happened. You know, there's strong demand that was absorbed, among other things, by the huge Porsche deal. But I think that's the big caveat here. It comes at a price. Porsche paid 170 basis points for 5 years, which does not fit their credit profile. Obviously, everybody else needed to pay attention, otherwise they would have been shut out of the market if they hadn't been in line with that kind of pricing. So this is this elevated pricing for all, and not surprisingly, investor demand stayed very strong. Right now, speaking as an actual practitioner, I can tell you that the average is about 150-ish for elevated historically spread for 5 years. We're hoping that someone will brave the market at 130, but let's see what Q2 brings. And also in terms of investor demand, there's a sector preference as far as I can make out for industrials, for consumers, someone who can sort of power through the cycle because there's a lot of volatility around. So basically a mixed picture, but strong demand on the back of elevated spread levels.
Right. You mentioned the Porsche deal there. I think this deal at the whopping 2.7 billion, the biggest deal ever placed in the market, shows us, well, if you are really a good credit and you offer a decent spread, you can even achieve the market depth for the placement of larger benchmark Schuldschein. So I think from that point of view, that's a good perspective for the rest of the year. And moreover, what I think is that investors fear that the market has deteriorated in terms of creditworthiness is not really well founded. Our research shows that the leverage in the market over the years has not really deteriorated. And especially when we look at 2023 right now, with a leverage in terms of net debt to EBITDA, the median value of all these companies at 1.6 is even at the lower end of the range we saw so far. So also from the creditworthiness perspective, a very solid development in the Schuldschein market.
Yes, that's a very interesting point, because obviously the leverage ratio is a proxy for a rating that most companies in the Schuldschein market don't have. And at this point, I mean, tell us a little bit about the other trends that are important in the market. ESG, sustainability comes to mind. What's been going on there?
Okay, let's talk a little bit about ESG. So in the first quarter, obviously, the value or the market share in terms of volume of ESG Schuldschein went down a little bit, but that was essentially due to the huge Porsche deal, which was not an ESG deal. But if you look at the number of Schuldschein that were placed in the market in the first quarter, 12 out of 33 deals were placed with a sustainability component, and that's the highest market share so far. And it even gets better when we look at the deals that are in the marketing stage right now or will be valued a little bit later during the year. So then the ratio goes up to 50%. So we see ESG continues to be the trend, and it's not going away.
Yes, thank you for that. And yes, well, I'll put the question pretty straight to you. What can we expect for the rest of the year? Give us a little bit of your feeling where the market is going.
Okay. Well, as you know, it's April, so it's really early to say, and I certainly do not want to get into an argy-bargy what's going to happen. The market can always have a turnaround or go down, but knowing that we had a record quarter in the first quarter and that we have that strong pipeline into the rest of the year, and with the knowledge that normally the second half of the year is developing even a little bit better than the first half of the year, I would say the market is good for up to 30 billion euros in issuance volume, and certainly a lot more than 20 billion.
Okay, well, many thanks, Uli. That sounds like a very good outcome if the year should proceed like that. This is our expectation from the practitioner side, as you said, as well. Let's look forward to our next quarterly in 3 months' time, and I hope you found these infos interesting. Thank you for tuning in, and we'll see you next time.